Yeah, I mean, chips are strong. The overall economy is strong. I would argue if you look at any kind of a long-term chart of Fedex, you'd really be impressed, especially by the last few years. I mean, this is just a company that's right in the center of where our economy is, which is consumers buying things and having them shipped to their house. It's sort of like how media has become streaming.
Yeah.
You can't yet stream physical products to people's houses, but you can ship them. And people love that. And it's the holiday time. And yeah, it was a little bit of a surprising, I think, reaction, at least to FedEx. But look at it as the overall thing. And that's what happened on Wednesday to the market. Things are very strong. People are happy. The news looks good. The forecasts are good. And if FedEx for one quarter drops the ball, that doesn't mean they're not a really important company at a really strong place right now.
Hey, Scott, how are you?
I am well. Happy holidays to you.
Are you out fighting the holiday crowds to get your stories done?
Not crowds, actually. This is a week where everything is slow, so it's easy to get from place to place. The hard part is finding someone to talk, just because so many people are gone. And I appreciate that. Everybody's worked hard. I say, let them have some time off.
Yeah, it's been a hell of a year, and we're looking forward to an insane one. So, might be a good time to take a little hiatus. Okay, so this being the holiday shopping season, let's talk about the economy. We kind of talk about it incidentally, but this is kind of the right moment to talk about it, the big picture. So, the stock market had 9 consecutive days of hot growth, and everything was looking really great. And then Wednesday, boom, the market fell, it plummeted. And there's a lot of reasons that are being suggested. One of them was just simple profit taking. Everybody made so much dough the previous, 2 weeks, previous fortnight, that they getting some money out for Christmas shopping or whatever they wanted to do, New Year's parties. Another reason was people are still feeling pretty optimistic that the Fed is going to drop rates again, maybe as early as February or March. So that's got them feeling well when it came back, because it came back Thursday. So the market was doing great. It crashed and then immediately recovered, despite the news that FedEx announced a kind of a lousy quarter, which seems surprising because, I go for a walk and I just about get run over by 4 or 5, FedEx trucks racing to everybody's house. So that was kind of a bummer. But in the Valley, Micron announced a really good quarter, and their stock went up 8%, which is pretty impressive. It just shows that chips we're going to talk about chips later, but man, they are back.
Yeah, I mean, chips are strong. The overall economy is strong. I would argue if you look at any kind of a long-term chart of FedEx, you'd really be impressed, especially by the last few years. I mean, this is just a company that's right in the center of where our economy is, which is consumers buying things and having them shipped to their house. It's sort of like how media has become streaming.
Yeah.
You can't yet stream physical products to people's houses, but you can ship them. And people love that. And it's the holiday time. And yeah, it was a little bit of a surprising, I think, reaction, at least to FedEx. But look at it as the overall thing. And that's what happened on Wednesday to the market. Things are very strong. People are happy. The news looks good. The forecasts are good. And if FedEx for one quarter drops the ball, that doesn't mean they're not a really important company at a really strong place right now. And, I think you have to look pretty short term to see anything wrong with what's going on out there.
No, the early numbers for retail sales in this holiday season are up a lot from even a year ago, which had that whole we're getting out of prison sort of mass buying. I mean, people are really buying stuff, and we'll get into maybe a negative part of that in a moment, but that's exciting. I think another factor maybe we've been talking about inflation for a year and a half now. And yeah, prices are higher than they were, but inflation seems to be wrung out of the economy. which is going to be looked back as a kind of an economic miracle, because usually when you have real inflation, the only solution is you just put the brakes on the economy and crash it and drive inflation out. And yet we seem to be making a soft landing and still getting rid of inflation. That's kind of an amazing achievement. And does it go to the White House? Does it go to the Fed? Who do you think should get the credit for this? Because it's a milestone event.
You know, it depends who you talk to. I mean, it seems like our country is as divided economically as it is politically, and 50% would tell you, oh no, the Fed did everything wrong and the Biden administration did everything wrong, and 50% of you would say, gosh, this was a heroic save of the economy when it could have tumbled into deep recession, and obviously we didn't. I think the biggest factor was the jobs. People still had jobs. The unemployment rate stayed low. And when people have jobs, even inflation doesn't hit households as hard. Maybe people cut back a little bit at the grocery store or when buying gifts, but they didn't cut back all that much. The economic engine kept on going, led by, as always, the consumer, and as we saw in the last several months, the investor. And so people, I think, just sort of dealt with it because they were able to. And in areas where they weren't able to, a la the housing market, you saw mortgage rates go up and people just abandoned the housing market. No buying, no selling, especially around here. And now, just, you know, for my story that I did today, talking to real estate agents, talking to some people who are saying they're starting to see some buying because mortgage rates are coming back down, but prices are still high. But again, they're testing the waters because rates are coming down. And I think that's why the stock market is doing so well also.
My nomination then for the person of the year for Time Magazine is the consumer. I have to agree with you. Consumers save this economy. They kept it buoyant when everybody was predicting that they'd run for the hills. And I think this Christmas vacation is a turning point. It's been really interesting. Now, the downside, credit card levels, the balances are now at stratospheric nosebleed record levels. And now we're starting to hear, yeah, in fact, credit card lending has now surpassed its pre-COVID trend. It's actually arcing up higher than even before, and it was growing pretty fast then. And now we've got these companies called like Klarna, Affirm, PayPal, of course, and Afterpay, which allow you to buy now and pay later to loan you money. So on top of your insane credit card balance, you can now add more debt on top of that using a whole new technological medium. What do you think of that? I mean, this is kind of frightening. This is sort of the monster in the attic that we're all having a great time at the party below, but we can kind of hear the thumping of footsteps up there and the rattling of chains and going, I hope they don't come down to visit us.
Yeah, this is one of those things that pops up from time to time where technology takes credit for something that has existed for a million years. These companies allow you to, right, buy now, pay later, which is literally what credit cards have been allowing us to do forever since there have been credit cards. And credit cards tack on sometimes as much as what, 19, 20%. It's very risky to carry a lot of debt, not only because it's going to cost you 19 or 20% to pay this off over the weeks and months and even years. But also because if there is an economic downturn, people with a lot of credit card debt get hit the hardest. And so for those of us who live life just nervously twitching about carrying a lot of debt, this trend, I would say, is dangerous and really undercovered. I don't think it quite gets the attention it should in an overall good economy, but an economy that is propped up by debt is dangerous because that stuff comes due. And sometimes it comes due when the economy is not good and people are not working. And that's a really dangerous combination.
So how does this work? Are they paying gigantic interest rates and they're just pushing it off with these firms?
Yeah, you know, the firms like, let's say a firm will work with an Amazon and say, okay, you can buy this with Amazon and do the buy now, pay later. And again, even buy now, pay later is not a new concept with stores. It was called layaway, right? I mean, you could put things on layaway and sort of pay as you go. Now you buy them, you bring it home, and you just pay it almost as if, very much as if you bought it with a credit card. So I don't quite believe there's a huge distinction here. I think it's another way for people to either, let's call it what it is. It's another way for people to get into debt. And I just think that that's dangerous to cover that much debt for that long.
And to deepen debt beyond their credit cards.
Right. It's another level of debt, I guess.
It's always been around. Yeah, it had a very specific term too. It was called loan sharks.
Well,
and so how doesn't a firm collect from these people if they turn deadbeats? Loan sharks did it by just breaking your knees. So,
well, right. I mean,
their recourse.
Yeah, I mean, Visa and American Express, they don't come to your house and break your knees, but they affect your credit scores if you don't pay this stuff off. And as you know, if your credit score takes too big of a hit, it makes it difficult to buy large ticket items like, cars and houses. It makes it difficult to rent apartments. You want a good credit score. You want to keep your credit rating high, especially at a time where we are dealing with inflation. But then again, we're dealing with high employment and good wages. And so I don't know. There is a strategy that a lot of people have to carry a lot of debt, whether student debt on top of mortgage debt, on top of car payments, et cetera, et cetera. But there's another strategy that is to try to avoid that, because when a rainy day comes, you don't want to get caught owing money.
Yeah, it's called being responsible and thrifty. That's the other strategy. Yeah, having lived on both sides of that fence, I advise the thrifty side. Okay, this is an interesting move. Talking about your favorite frothy subject, looks like the SEC may make crypto history in a few weeks by approving the first spot Bitcoin exchange traded fund, which is cool. Not for me, but you're actually going to be able to have in a what do they call them? They call them
ETFs.
ETF,
Yes.
which essentially you're going to be able to trade on Bitcoin and stocks, right? Which is, you're adding speculation on top of speculation.
Well, right, but this spreads it out. I mean, the fund is, in stock terms, a safer way as opposed to buying an individual stock. If you get a Bitcoin or crypto ETF, people are saying, this gives the whole crypto world more legitimacy. And as this has come closer and closer to becoming reality, you've seen the price of Bitcoin soar, I guess because of this extra legitimacy. But what I wonder is, right now, there are, speaking of a dividing line, there are people who will jump into crypto and then people who absolutely will not. Even if there is an ETF, will that lure people who have always been wary of crypto to jump in because perhaps it's a little more legitimate, it spreads the risk out a little more? Or will they say, no, look, crypto is my kryptonite. I'm not going to go there because it's so risky and so volatile. And I don't know the answer to that, obviously, but a lot of people have been buying Bitcoin on the promise of an ETF for so long. So the question will be, what happens when we finally get one? Is it buy on the rumor, or will people then say, now's the time to get in. This is what I've been waiting for. That will be interesting to see, if there were people on the sidelines waiting for perhaps a more, I don't know, cautious way to get into crypto.
Well, yeah, it seems like it's a slightly more cautious way. Will it have with it all the tools of a stock exchange? Like, can you short it? Can you be a day trader? Can you do all of these things that are kind of trickier now? Also, you don't have to worry about losing your passcode if you're buying crypto stock.
Right. I mean, one thing that we've seen with crypto that has been a danger to the consumer, and I mean just the average everyday trader that wants to get into it, is the demise and collapse of these funds, of these exchanges. FTX, famously, Sam Bankman-Fried going to jail. Binance, it has led a lot of investors to the stock, which trades in America on Coinbase. Coinbase has had an incredible run lately as people are realizing, it's traded on the stock market. That gives it legitimacy. And so that's where we're going to buy and sell our Bitcoin. With an ETF, I don't know if that gives a little more legitimacy to buying and selling. It will be interesting to see how this plays out. We seem to be still in a semi-Wild West era when it comes to crypto trading. It was interesting that as FTX and Binance both collapsed, with, had their legal troubles within a short period of time, FTX collapsing completely, that the price of Bitcoin stayed steady. And now with the promise of the ETF, it has moved higher. Coinbase as a stock has moved higher, perhaps because of its legitimacy as an exchange. So there's still a lot of unanswered questions with this perhaps ETF on the way. But a lot of people are looking forward to it because they want to see crypto and Bitcoin as a legitimate way to trade, I guess. It still seems very speculative to me, but here we are again, getting very close to another Super Bowl. And that was, if you remember a couple of years ago, the tip of the very top of the market with those Matt Damon commercials and everything. And it crashed from there, but then has come back strongly. So it's been a wild couple of years for Bitcoin.
Well, SEC's blessing, it seems to me that kind of confers the idea that there'll be more due diligence on crypto. There'll be audits. There'll be all of those things that the SEC is essentially saying, no more of this speculative, crazy guys living on islands in the Caribbean. We're going to do it right this time, and we're going to make it orderly, and we're going to make it responsible. I think if they're not planning on saying that, then they've made a mistake, because I think that's the perception of it right now.
And I think that is the perception that people are seeing. And I agree with you. And I think Bitcoin has gotten to the point, I would say crypto, but there's just still so much crypto that's call it what it is. It's crap. But Bitcoin as a legitimate but speculative investment has been around now, I think, for quite some time. And people seem to be willing to buy in and hold it. You get the big banks talking about it. And so it has a legitimacy in financial circles and in society that perhaps it deserves more scrutiny, like you say, more ways to trade, more. I think scrutiny is just the big word here as it gets watched more closely. And granted, there were people, and probably still are, that enjoyed it as the pirate currency it was and was seen at. But that didn't do any favors for investors who watched it rise and fall, like mountain peaks. I mean, it was crazy. So I think legitimacy comes with scrutiny, and perhaps vice versa.
Well, part of scrutiny is reporting.
Yeah.
You got to put out the numbers, let the world see. You got to bring sunlight into your transactions,
100%.
Which alone may be worth creating this. So, okay, Apple. I didn't expect to talk about Apple. You think at the end of the holiday season, they'll announce great numbers and all that. But if you're going to buy an Apple Series 9 watch or Ultra 2, you better get it right now, because they're going to disappear from the store shelves in a few days. Apparently, there's a lawsuit by a company called, what's the name of the company?
Massimo, if I'm pronouncing that right. Massimo.
Sounds like the first name of a clothing designer.
Yes.
But this is that device, the sensor that mounts on the watch, and looks at pulse rate and that sort of thing. And you can see it's leading towards eventually being able to read blood for diabetes and other problems. Well, they sued from their patent, claiming that to the Federal Trade Commission, claiming that Apple infringed on that patent. And it looks like Apple thinks they're going to lose this one, because all imports of those watches to the US have been suspended. And that'll start on December 24th. And I think the full thing comes down right at the first of the year. But this is a big case that has a lot of implications for Apple, because, the watch is supposed to be their next big thing, always was. Ever since it was introduced, this was going to be the follow-up to all their, milestone landmark products. It's been doing pretty well. It hasn't been great guns like the iPhone or the tablet, but it's done pretty well, and they've been moving rapidly towards its destiny, which is not necessarily these apps, but the use it as a medical monitoring device for consumers. And this seems to throw a monkey wrench into the whole thing, because that was going to be a real breakthrough.
Yeah, this is a rare misstep for Apple that a company they were apparently working with, somehow the wires got crossed and the company was successful in getting Apple to sort of pull this, at least for a little while. And typically these things happen behind the scenes and, money changes hands, stock changes hands, whatever it is. And in this one, again, a rare misstep where Apple looks a little sloppy, frankly, and some of their watches won't be out there. And it's an awkward time because it's Christmas. As you and I speak, it's just about the time where Apple sells more things than any time of year. And so I predict this gets fixed, but not in time for Christmas. And so it's an awkward misstep. But it's true that these sensors are only going to become more, I guess, important, more prevalent in our lives. And we've seen companies like Theranos make missteps on this thing when it comes to tracking and reading blood and all that stuff. But wearables are health devices and eventually likely healthcare devices and health monitoring devices. And so as exciting as it has been to see these things progress, clearly companies have to figure it all out together before they bring something to market, or else you're going to get something sloppy like this.
Yeah, I mean, I've been involved in this medical devices stuff for a while. It's gone from the hospital to the doctor's office, and now it's racing towards your wrist. And that's where all those devices you see in the doctor's office measuring your pulse rate and your blood pressure and your blood sugar and all that, it's going to be on your phone, or it's going to be talking to your iPhone. Okay, that's the future. This misstep is an ugly one, but I think Apple can get past it. One of the bad things about this is whenever you hear infringed on a patent, you always think that the company being sued stole it. And most of the time, it's nothing like that at all. They had a deal with the other company. They were already implementing it in their product. And then the other company says, no, the deal's off. And they immediately sue for infringement of the patent, right? So Apple probably, said, we got to renegotiate this or something, or Massimo did. And then it broke down temporarily. And now they're suing. And now it's, the bad guys, the black hats at Apple, stole this little company's, great product and, wahaha.
Well, look, does that really matter? I mean, the bottom line is it's unseemly, it's sloppy, it's not anything like what Apple usually presents to the public. And yet at the same time, reading more about this technology, as this story has sort of led many of us to do, it's like, oh, this is kind of fascinating. Now go and get your act together, you guys, figure something out, exchange whatever you need to exchange, and get these products to the public.
Yeah, they put it on next Christmas's watch. That's all we ask.
Probably.
Okay, finally, we talk about chips every once in a while, but we don't talk about semiconductor technology. And I think, and I've always said, these inventions appear in a low-key way at technology events or published by a university. And then a few years later, we go, whoa, what is that? Where did that come from? Well, I think it just happened at the IEEE meeting in San Francisco. Intel, Samsung, and TSMC, the Taiwanese company, they announced a new type of transistor. These are field effect transistors, FETs, and we've been living for years on FinFETs, and we're now moving towards a new device called a CFET, which is a complementary field effect transistor. Why is that important? Because a couple of years ago, everybody was suddenly announcing it's the death of Moore's law. We can't go on. We can't make chips any more dense because of, atomic effects and all that. And if you remember at the time, I said Moore's law is not going to be done until we say it's done. because there's a lot of other axes on the development of chips that we can pursue, even if we can't make the chips any smaller. Well, this is the big one. This is, you can take transistors and reorient them with these CFETs, and you can start making three-dimensional chips. You can start building layer upon layer of transistors until it's not a sheet of silicon. It's something more interesting and complex, almost like a wall or a brick. And that offers the potential of moving Moore's law along again for its next three cycles. And this is a big deal. And it's interesting that Intel's right at the front of it because they've missed the markets, but they haven't really given up on technological innovation. And to see these three companies, one from the US, one from Korea, and one from Taiwan, pushing this technology forward, especially folks that really do a lot of manufacturing and fab. It's going to take 7 years till we see it in action, but it's going to be one of those things. Remember Malone's law, technology revolutions take longer than they arrive. Technology revolutions appear quicker than we are prepared for, and they arrive later than we're ready for. This is going to be it's going to be low key, it's going to be invisible, and all of a sudden the first set of products is going to come out with these CFETs, and we're going to be blown away because it's going to be in memory, and the amount of memory it's going to be able to store in a tiny package is going to be mind-boggling. So we'll have to revisit this in 7 years' time when it happens. But I wanted to bring that up.
No, and it's encouraging that in a really, really strong year for chips and chip equipment companies and all of their stock prices, they've made a ton of money. They've established a foundation, not only in things like cars and computers and watches and smartphones, but most recently in AI technology. They've all been the beneficiaries of that, and they're clearly taking some of this money, pouring it into R&D, and that's necessary for any company or any industry, I should say, not only to succeed, but to thrive. And these companies are thriving, and I think they're going to have a very, very strong, important 2024 because AI is coming to the forefront. It needs memory, it needs computer power, and these chip companies that have been taken for granted for about 40 years now are going to be really the foundation of this AI boom, I think.
Well, I think for all those people that are calling it, sitting on a death watch for Moore's law, I think Dr. Moore's going to get his revenge. I have a feeling that Moore's law is going to keep going for the rest of our lifetimes. And that's a good thing.
This is obviously the year where we lost Gordon Moore, but we certainly didn't lose Moore's law. And I agree that this will keep going for a while.
Okay, that's it for now, folks. You can find us on Spotify, Anchor, Google Podcasts, Apple Podcasts, and YouTube. Have a great holiday weekend and have a wonderful time over the next week and a half. We'll be back right after the first of the year. Bye-bye.